Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, the trading week. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast partners, Carol Massar and Tim Stenovec, bringing together our Bloomberg TV, radio, and YouTube audiences worldwide here. And Carol, every time the market softens, we tend to get some sort of economic data that restores everyone's faith in this rally.
It's like the algorithms picked in and they said, oh, housing recovery and manufacturing and services recovery. And all of a sudden, Tim, we saw stocks moving to their best levels of the day here.
Yeah, I think the economic data was a really big part of it, but I also think a big part of the narrative today really had to do with the fact that the market and investors digested this news about the capital gains tax increase that the Bloomberg News broke yesterday. I mean, the fact that this actually happens, or the chances that it actually happens, it may not happen. It may not happen at a level above 40%, and it may not come to fruition given the divided Congress, or the Congress that we have right now that is really equal parts Republicans and Democrats, Caroline.
And maybe even if it does happen, we still rally. Like John Author's Bloomberg Opinion had that great piece that, like, back in 2012, when the last capital gains tax increase came in, stocks sold off just ahead of it, but then we rallied straight throughout 2013. So maybe we can shrug this off overall, Taylor.
You know what else rallies? Bonds. The 30-year yield peaked 5 weeks ago on a weekly basis, Romaine. On March 19th, we've fallen every single week since then. So some of those inflationary expectations, they migrate down.
Just yesterday we were at 1.7, 1.8. Everyone was freaking out about 2% on the 10-year and something else. And no, that's not going to happen. All right, let's take a look here at the equity markets. We came into this Monday, of course, guys, with 4 straight weekly gains on the S&P 500. It does not look like it's going to be a fifth. So S&P 500 had been at a record high. It's going to close just below that record high. That means it's going to be down on the week by about 0.1%. But here's your numbers. The Russell 2000 on the day up 1.8%. The NASDAQ Composite on the day up 1.4%. And the Dow Jones Industrial Average on the day up 0.7%. The NASDAQ and Dow Jones down on a weekly basis, as is the S&P. The Russell 2000 squeaking out a gain on a weekly basis here. Well,
and I'm really glad, Romaine, that you point out the small caps, because they really were the outperformer today. As you mentioned, up 1.8% as a group overall. Those major equity averages, though, the broader market, you know, despite the ups and downs, the volatile moves that we saw this week, we ended little change. And I think it's going to be really key next week because we've got some big earnings reports. I know we're going to talk about it later, but Taylor, we're going to be focusing on that.
Yes, we are. And here for the moment, for the day, we focused on some of the sector levels. You rightfully pointed out we're in the middle of earnings season. We got a few more of those today. That is what is driving the banks higher by 2.8% on the day on a sector level. SVB is crushing it. So is some of the tech hardware equipment. That sector is up 2%, led by Seagate Technology, really accelerating some of that growth. Materials as well, right? So very risk on, all as we migrate downwards. And for our radio audience, I point out 2 sectors that are in the red: utilities, and then, of course, some of those home products, which is off more than 1%. That's the biggest loser, Carol. Really, as you think about Kimberly-Clark, Clorox, some of the read-through that we got, everyone has been hoarding last year, that they're coming up on really tough comps on a year-over-year basis.
Yeah, no doubt about it. A lot of green that you're showing everybody on our TV audience and just for our radio audience. We saw that play across the board. Check out some of the winners. SVB Financial, they're the holding company for Silicon Valley Bank. The company reported EPS and sales above estimates. This has been a blowout this year. It's up about 50%. Adding on to that today, AMD. Intel loses, AMD gains. And we saw that certainly being one of the bigger winners today. Drop off that we saw in terms of Intel's, some of their businesses, particularly their data center revenue businesses, that is perceived as maybe a gain for AMD, and that's why you saw that stock moving up today. Cypress shares, not a company that we talk about a lot. It's a micro cap. It's a very small company here, up 171% today, but gaining today after getting an award from the U.S. Department of Defense prime contractor to make and test electronic assemblies for a government spacecraft program. Got to end with beer. Boston Beer, also a gainer today. Deutsche Bank saying it was a knockout quarter. Come on, guys. It's the weekend.
It is. You know, what's beer without some chips? Of course, I'm talking about Intel. You mentioned Intel, Carol. Look, we covered it yesterday when the market closed in our Beyond the Bell segment. Biggest drop in 3 months after reporting a drop in data center revenue, steep decline in gross profit margin. We heard Taylor talk about those tough comps. We're seeing that with Kimberly-Clark as well, declining around 6% today. Toilet paper sales plunging, shares sliding on reports of steep declines. That signals the end of the boom that was brought on by the pandemic. Of course, everyone a year ago at this time buying a ton of toilet paper and hoarding it. American Express lower today by around 2%. The company reported revenue for the first quarter that missed the average analyst estimates. And Honeywell lower by around 2% today. The shares moved lower after the outlook for the full year disappointed investors. Aerospace and energy businesses continue to struggle with fallout from the pandemic, Carol.
And you know also what's lower, Tim? Dollar. US dollar weakness is on the day. Let us talk to our global radio, TV, YouTube audiences and go cross asset for them, because on the currency front, I'm seeing a euro up 0.7%, the Danish kroner up 0.7%, Norwegian kroner getting a bid because of oil. This is all as the Bloomberg dollar index ends the day down by 0.4%. Why? We don't need a haven today because the economic data came out so strong, the housing data, the PMIs. So that feeds into also where oil had been going. Oil was up on the day. We see some of the metals perform well, zinc up 1.8%. Wheat, soft commodities, the story of the week for me, this food inflation story really being seen with weather an issue. We talk of Earth Day, of climate change. Wheat currently up 1.5% is where we trade. And lastly, actually, a bit of a bid for bonds when it looked at Europe. We saw a sell-off in European shares today, unlike the US, so a bit of a movement perhaps to a haven when it came to the European trade, Taylor.
You mentioned food inflation. Unfortunately, I don't see inflationary expectations showing up in my 30-year bonds on a weekly basis. You're still down about 4 or 5 basis points on the long end. Well, starting Monday. Starting from last Friday, it looks only like 3 basis points. I'm trying to just not say unch on this program every time. But on a weekly basis, Carol, what we see is you're down 3 straight weeks on the 10-year. You were down 5 straight weeks on the 30-year. Blink and you miss it. Inflationary expectations, well, maybe they haven't shown up just yet, at least in the long end of the bonds.
Well, listen, next week's going to be all about some blockbuster earnings. Most U.S. companies right now are surpassing earnings estimates. We'll see if that's the case when it's Facebook, Apple, Microsoft, Tesla, General Electric, Boeing, Starbucks, McDonald's, guys. I mean, we're going to get a good snapshot, Romaine, of what's going on kind of in the overall economy.
Yeah, busiest week here for the S&P 500, about 178 companies. But interesting thing here, I mean, obviously, while the EPS growth numbers are going to be phenomenal, but that's obviously been aided by how poorly they performed, of course, a year ago. But those revenue numbers aren't necessarily as strong. You're talking about 9% growth is kind of the aggregate estimate right now for the software companies, a little bit better for the hardware companies. So the bar here is set at a level that if they don't meet it, you could see a negative reaction.
Yeah, Romaine, one company that I'm going to be watching closely is Starbucks. Absolutely interested in how the company is thinking about the reopening. Also the effect that stimulus checks have had. And we've seen pockets of the United States reopen as more and more people have been vaccinated. Also, what's the company saying about the recovery in China? As we know, China is just months ahead of the U.S. when it comes to reopening. So looking for those Asian numbers as well.
And as we spoke to the CEO of Chipotle yesterday, asking about that food inflation when it comes to McDonald's, when it comes to Arabica beans, Romaine, as you keep saying, the coffee, what is Starbucks doing in terms of passing that one on? But it does clearly seem to be this theme within some of the restaurant chains, if not, of course, big tech.
Yeah, next week's going to be interesting because a lot of the companies that are reporting are going to give you a real good snapshot, not just of the U.S. economy, but really the global economy as well. And don't forget, guys, next week we also get that first read on first quarter GDP, which is supposed to be phenomenal, 6.5% annualized growth rate. That's up from that 4.3% that we had in the fourth quarter. The question is, how persistent is that?
Ooh, not transitory, Romaine, right? Persistent. I want to talk about something that's been very persistent, Carol, on the show, which has all been the housing numbers. Can we just take a look at those home sales that we got from March at an annualized rate of more than 1 million, well above expectations. You're up 21% month over month. I love it when we show up and just pull up the charts like that. You are now the highest since, wait for it, 2006. I don't know if that's a good sign or not, but sales in the South, the highest since 2005. We all migrate south. Get out of the Northeast.
Well, listen, and that's if you can find a previously owned home and you can actually buy it, because we know it's been really tough to do it. And we know lumber prices, they have really been off the charts. Lumber mills aren't producing it, and as a result, those costs are going up, but there's not the supply out there. And that, I do wonder whether or not that starts to slow down some of those housing numbers at some point.
Yeah, I bought my first house at the peak back there in 2006.
Ouch, nice timing.
Yeah, maybe now is the time to buy again. Are we going to talk about crypto at all? I mean, crypto just had like an amazing week, and by amazing, I mean awful.
Bad awful.
Crypto, yeah, it's been down on the week. But guys, look, yes, it sold off, but 50,000. Can you remember the last time it was at 50,000?
It's still a great investment. If you've been in it in the past year or the last couple of years, you've made a lot of money.
Yeah.
Yeah, basically you're back to where you were, what, just over 30 days ago, Tim.
Yeah, I mean, look, it's been an amazing year for Bitcoin. It's been an amazing calendar year. But if we think back to where it was a year ago, oh, if only to have a time machine, guys.
Oh, my God, I wish we had done it. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again Monday, same time, same place.